Hello, everyone. This is Justin Smythe from nextbigtrade.com. This is your weekly index review for December 22nd, 2023. Starting out this week with the S&P 500. The S&P 500 closed up 0.75% for the week for another up week. This is 8 consecutive weeks to the upside for the S&P 500 coming out of the late October lows. As I discussed in the newsletter, there's some warning signs underneath the surface now that are occurring in this stock market. The first one, which we'll look at in a second here, there's been overbought breadth for 4 consecutive weeks now, basically since the start of December. And if you look at the timing model document, which is part of the newsletter website, in the timing highs section, overbought breadth is one of the things to look for when you're looking for a market that's starting to top out and pull back into a potential, move lower. So that's the first factor. The second thing this week is that the number of stage 2 breakouts was on the lower side. That can be explained perhaps a little bit by the week before Christmas and the market's starting to trade a little bit slower heading into the end of the year. However, powerful uptrends are driven by breakouts in leading stocks and leading sectors, and we're not really seeing as much of that this past week. So that's a warning sign, even though we're heading into Christmas. And then another warning sign is that specifically in the artificial intelligence sector, some of the recent breakouts actually did not follow through, moved lower, and the sector as a whole is actually struggling a little bit here. Even though, if you look at the sentiment, it seems like people are very interested in that sector still, but the action in the stocks is starting to, not follow through and not act right. So there's, multiple issues that are starting to crop up that could potentially derail this rally. And after 8 powerful weeks up in a row, the market's definitely a little bit frothy here anyway. So that's something to take into consideration. Let's move into the daily chart for the S&P 500. You can see here that again we've had a strong move to the upside for 8 consecutive weeks. Haven't even retested the 20-day moving average during this entire rally, really. I think if we do get a upcoming pullback, a move lower down to the 4,600 level, maybe even down to the 4,500 level, down to the 50-day moving average would be a possibility here. Perhaps retest the former area where we consolidated back in late November, early December, and this would be the former highs from the previous rally as well. That might be a logical area for the market to pull back and kind of reassess after that, see if some more stocks start breaking out. But again, after such a powerful move, the market really needs to see some new stocks start to break out. Otherwise, there's going to be nothing to fuel it higher here, and it's just going to lose momentum to the upside. Turning to the NASDAQ 100, volume was a little bit lower here this week, although technology did outperform the S&P 500. Volume was higher on the NASDAQ Composite, again for the 4th consecutive week. And this speaks to the fact that small caps have really accelerated the last 4 weeks as the market's gotten more speculative as this rally has gotten further along. And that can be seen in the Russell 2000 and the Russell 2000 growth as well. We've got 4 consecutive weeks of heavier volume, and these small cap indices outperformed the S&P 500 this week as well. So moving to the breadth, you can see here we've been hovering above the 80% level all December. the market can definitely do that when it's in a strong uptrend, but eventually momentum tends to give away to the upside, and then you have a move back lower, which resets sentiment, and then the either buyers come back in or you have a larger correction if not enough buying pressure comes in to buy the pullback. So at this point, again, we're getting into the Christmas rally portion of the year, but we need to see some rotation and see the market move on to something else, or otherwise there's really nothing to continue to push this market higher. So we'll see what happens over the next kind of slower 2 weeks. But I think this market is definitely set up to pull back here, if not over the Christmas rally season, then early in January. The NASDAQ 100 is extended as well. You can see this is above 90%. This is the most overbought breadth has been this entire year, actually over the past 2 years, including the bear market from 2022. And the NASDAQ actually finally got overbought this past week. So that, again, this shows that the small caps have really finally joined this rally after lagging. And you can see that even during the May to July rally, the NASDAQ composite never got overbought. This was led by large caps, and in particular, artificial intelligence really fueled this rally. This rally has been led by cryptocurrency. The artificial intelligence stocks started out doing well, but they've kind of tapered off lately. And again, that's a negative sign for this market. Finally, moving to the VIX, another negative for this market is the fact that the VIX closed positive this week, up 6%, while the indices were actually up this week. On Wednesday, there was a major pullback in the afternoon, and the market actually still hasn't regained, I think, the highs from that move. So some selling pressure came in last week, and we'll see if it continues as we start trading over the next couple of weeks here. But the VIX did get rejected at the 20 or the 10-week moving average. If we do see the VIX close above this moving average, that's, again, a warning sign that we're moving into that corrective period. That's what happened back in September and back in August when the market went from being in an uptrend to being in a correction. And you can see that we stayed above the 10-week moving average for most of the correction until it was over. So watch this VIX. If it does continue to move higher again soon and get around that 10-week moving average, that's a negative. That means we're in a corrective period. So overall, warning signs in this current market. We need to see another sector kind of emerge here. If not, I would be very apprehensive. Obviously, the best time to buy stocks is after a correction and not after a major rally in the stock market. So if the stock market is getting ready to pull back, then we're going to be setting up a better buying opportunity, but we just need to be patient and let that pullback play out.